movers of the day. Welspun Corp has slumped after a weak quarter. Nigel is here to take us through the Q4 earnings fine print. Nigel.
Well, that's right. Welspun is under some pressure, but just keep in mind the stock has been a big gainer. So some part of the street is sitting on big money. Now, in terms of the numbers, they're quite disappointing because there was a degrowth on the EBITDA front. And if you look at the margins, well, they came at around 7%. That compares with a double-digit margin, both on a sequential basis as well as on a year-on-year basis. What didn't work for them? The other expenditure, that was a little bit higher. The employee cost was higher. The gross margins as well did see some bit of compression. So that explains why, in fact, the margins did see some compression. But the PAT number did show a growth of 20%. That's because other income was higher, finance income was lower. And also they have a 30% stake in the Saudi Arabia facility, the associate company out there. And the profitability out there was much better. So that explains why the profit number looked much better, though the EBITDA number was under some pressure. In terms of, the debt number, well, it's come down drastically. They have been guiding that the debt comes down. It's come down by close to 1,000 crores in the past year or so. They have some capex plans as well going ahead. So we'll have to see how that shapes up. And for the next year, they've guided for around 17,000 crores of revenue and a EBITDA number of around 1,700 crores. Or for the time being, the street is not too impressed with these numbers. Back to you.
Okay, the other stock which is on our radar and